that's the big talk right now. Contagion. What's the next shoe to drop? What's the next domino to fall? Whatever metaphor you like. Joining us now to discuss this and lots of other things is Kraken incoming CEO Dave Ripley. Hi, Dave. Welcome back to the show. So, Dave, as you know, there's been a lot of talk about Genesis Global Capital hiring an investment bank to explore options, including a potential bankruptcy. Have to mention that Genesis is the sister company of CoinDesk. I just wanted to get your take before we get into Kraken of just what you think the outlook is like right now, because this is really, there's a lot of rumors out there. There's a lot of concerns out there. What's your take on Genesis, on Grayscale? What do you think is going to happen? How worried should we be?
Yeah. Well, thanks for having me on. Good to be here again. Well, first of all, we definitely feel for all the FTX customers. Truly a travesty that this type of fraud would kind of eke into our system like this. But to your question on contagion and how far does this go? I don't have the answer, but I think logic will tell us, both from what we've experienced previously, that, there's likely going to be more, right? I mean, we have the Genesis, rumors out there. I think there's, been some, confirmed communication on that particular one. And, we haven't seen, I don't believe we've seen the list of FTX creditors yet. That's going to, lead us to probably several other companies that have going to experience some contagion from this thing. So, I think there will likely be more as this kind of works. This leverage kind of works its way out of the system.
And in your view, what would happen if Genesis fails? How big a deal would that be, and what would be the impact across the industry?
Yeah, that's a good question. I think Genesis is more primarily a broker, a lender, and over-the-counter trading desk. They, of course, had a big part of their business where they did, take assets from various, custodial retail platforms and then, lend them on and try and earn a return for those platforms and retail investors. I think that's the part that is mostly impactful. I think the void that they'll leave in over-the-counter, trading and there are other parts of the business, I don't see much impact there, honestly. There are other strong, reputable over-the-counter trading desks. We're one of them that'll, step in and fill that void quite nicely. So, yeah, I think it really is just extended contagion and extended kind of potential loss of funds for investors. That is, the most concerning piece.
Hey, Dave, great talking to you again. Wanted to kind of shift back to the FTX conversation. I think, directionally, a lot of observers have said this is really bad for the centralized exchange model. If this can happen to FTX, it can maybe happen to other black boxes that are dealing with customer funds and acting as a centralized intermediary into these markets. I guess my question is, beyond just sort of making hay while the sun's out and saying, hey, these guys are bad, we're good, why should retail investors trust Kraken or any other centralized crypto exchange right now? We've seen extreme outflows to self-custody. What are you saying to make the case for why you should be a trusted middleman when FTX wasn't in this case?
Yeah, well, first off, let me say that I think that, if we're optimists and we look for a silver lining here, it is the flow of funds to self-custody. I mean, we're a strong proponent of self-custody in the crypto ecosystem. This is the true essence of Bitcoin and crypto and how it was, founded, truthfully. And one of the things that is really critical to the system that, it is the only place in the world where you can actually take control of ownership of your own, assets in a digital form. And so this is critical. And I think that's an important outcome of this. And so we've long encouraged self-custody, and we're going to, continue to encourage it going forward. With regard to centralized exchanges, yes, I mean, the story is actually in line with what you described. I mean, it's not easy, honestly. We invest mightily in security and regulatory compliance and all these different pieces. I mean, I think our security team is, larger than the entirety of FTX, headcount in total. And so, I think we've been investing in all of these things that have, kind of been behind the scenes. that aren't up front there with all the kind of shiny bells and whistles, and that's where we focused this company and how we built it. And so I think, again, if we can call it a silver lining, obviously from truly a tragedy, that there will be more emphasis put on these aspects of companies, and individuals are going to ask for proof as opposed to just kind of blind trust in centralized third parties.
Dave, do you think that this is also going to change the relationship between centralized exchanges and regulators? And the reason I bring this up is about 4 years ago, Jesse Powell from Kraken was pretty much harsh on New York Attorney General Letitia James in part of the Attorney General's efforts to combat market manipulation. Has this changed? I mean, when I say harsh, I mean, I think he called the Attorney General something like an abusive ex who keeps stalking you or something like that. And that was a public tweet. Do you think that this is something that this stance by centralized exchanges needs to change? Is there now more humility on the part of the crypto markets, the centralized exchanges, in dealing with government officials after such a major collapse by, what's viewed as one of your own? Is that going to change?
Regulation has been on the rise and increasing for years now in the crypto space. Since I got in 2013, we've seen huge steps forward with regulators, coming in the fold, kind of creating new de novo licenses for crypto, depending on the country, pulling crypto into existing licensing regimes. And we're going to see this, this continue. Does this impact the pace? Yeah, probably. I mean, it remains to be seen. But, I do think, there's for certain strong, smart regulation and problematic regulation. I mean, let's not forget, SBF had, donated significantly to government, U.S. government, Democratic Party, was working closely with regulators. And, the legislation that he has out there right now is something that is both detrimental to DeFi and kind of the ideals of cryptocurrency, and simultaneously something that would kind of further prop up his business, create a regulatory moat, and potentially even allow him to continue running this fraud for a longer period of time. So, I don't think just immediate regulation at all costs without any kind of conscious thought to it is the way forward here. I think we need to really be thoughtful about what we look to do and how we look to kind of put appropriate regulation in place for the cryptocurrency.
Well, if you had your chance, if you could, how would you structure that regulation? There's been a debate over who can oversee the spot exchanges in the United States. Should it be the SEC, which has a lot more resources, but would maybe perhaps deem a lot of what's being traded as securities, or should it be the CFTC, which would view it as commodities, but at the same time doesn't necessarily have oversight over spot markets, and doesn't have the resources to enforce any kind of regulations to the size that the SEC does? Who would oversee it? How would you like to see it structured on a federal level?
Yeah, it's a good question. I wouldn't say we necessarily have like a really strong view on that piece. I'll say where we do have a strong view, and then maybe come back to that one. Where we do have a strong view is on the regulation should be pointed at trusted third parties like Kraken and other businesses in the space. I mean, this is part of the role that we play, integrating with the legacy financial system and providing a bridge. I mean, I think Bitcoin itself does have its own form of regulation based on, a public, transparent blockchain, cryptographic validation, and all of these different pieces, and, kind of targeting directly Bitcoin and some of the other cryptocurrencies isn't the path forward. I think for the trusted third parties, as you pointed out, yeah, it's a good question. CFTC versus SEC versus there's other regulators out there as well. There's the state departments of finance, the OCC is another player out there. We're currently have a license from the state of Wyoming for a state chartered full reserve bank. And so I think there are a number of regulators that could actually play a role here. Specifically on the CFTC versus the SEC, I do think the CFTC is a more natural regulator here, just given that we're not talking about securities. We're not, Bitcoin, Ethereum, these are not securities. Therefore, I don't see the SEC playing a role here. Of course, to the extent that there's, someone out there who looks to tokenize some equity, tokenize some securities, yeah, for sure, that falls under the SEC's remit. But the SEC, as the name implies, should be focused on securities.
Dave, quickly as a last question here, I know Kraken has promised to undergo regular proof of reserves. There's obviously a lot of talk, a lot of chatter around that. Is that something that you'd like to see extended by regulatory or other means across the entirety of the crypto exchange space?
Yeah, this is a fascinating one that has come about recently and is gained a lot of steam in the space. And we've been conducting proof of reserves for a while, and we've conducted 2 already this year. One at the start of the year, one over the summer. We have another one planned for the start of this coming year. I don't believe really any other exchanges out there have done these to a meaningful degree or at all. We do think it's a important component, an important piece. As Kraken was a trailblazer here. We're glad to see other exchanges coming into the fold and moving forward with these. But yet again, I think we need to be careful. CoinMarketCap has something out there that basically has this little icon you can look at next to an exchange. And I think they're calling it proof of reserves, and it's literally nothing more than a list of wallet addresses without even any proof that the exchange has ownership of those wallet addresses. And so it's quite ridiculous. I guess the lack of clarity and almost the intentional misinformation, frankly, by some of our peers in other centralized trusted third parties on how they're looking to mislead individuals here. So I do think we have a lot of work to do. I think for us, that's what we're looking to do. Explain very clearly that Kraken's proof of reserves is about assets and liabilities, proof of ownership of the coins, independent third-party audit, ability to go to the website, look at your balances, take your account ID, go to the auditor, validate those balances were included. I mean, just drastically different than what we're seeing, for example, what we see right now when you go to CoinMarketCap, and it's literally a list of wallet addresses without even proof of ownership of those wallet addresses. It's humorous and kind of sad at the same time that type of advertisement is happening, and you kind of see it all over Twitter as well. It's something that we really need to focus our energy on, making sure that folks out there understand there's differences here, and you should be asking these same questions of your trusted custodian if you're using one.